Let me just reiterate, if anyone in the audience has a question, the best way is to just put something in the chat and say, I have a question, and then I'll call on you and you can unmute. So Bill, we've heard about this SPAC SPAC thing. Is that a good idea for investors?
So the interest, I can tell you that the interest in SPACs has grown dramatically. In fact, this year, or in 2020, I think it's triple what it had been in the previous few years before that. So what a SPAC is, a special purpose acquisition company. It's essentially a blank check company. It could be a good investment depending on who the manager is. I know, like, for example, Pershing Square, Bill Ackman, I think they last year had the largest SPAC ever at $4 billion. But I think you need to be aware of who it is that's structuring the SPAC and what the management team looks like. So it can be a good investment. However, you have to understand that you are investing in it's essentially a blank check company. So I think the management of that is very important.
So is this a spin on a reverse merger? First of all, could you explain what a reverse merger is, and how is a SPAC different, similar, old wine, new bottle? What's the difference?
Yeah, they're similar. And Eric, I don't know if you want to pipe in as well, but I would say that, a reverse merger is where you have a private company that acquires essentially a public shell company, and as opposed to going through an IPO, they acquire the shares of that public entity in order to go public. And a SPAC is essentially it's like an IPO in which you invest in this blank check or this shell company with the ultimate goal of purchasing a company with those shares. So I don't know, Eric, do you have any insight into this?
No, I think the way you differentiate between the two is right. I think that, and Bill, the point you made that who the sponsor is of the SPAC is really a key point. With a reverse merger, it's basically, as Bill said, a private company that comes to an agreement with a public company, basically stepped into their publicly traded status. So it's negotiated. Everyone knows, who's involved and who'll be running the company post transaction. With a SPAC, it's a little trickier, and you have the presence of the sponsor, and they may in fact be on the board of the host of the SPAC and of the company that the SPAC acquires. So I think there's a trickier political governance dynamic within a SPAC, and the sponsors usually have a preferred interest in the asset that they acquired, so they're getting the shares at a discount. Although that can change, and I think you mentioned Pershing Square. I think they most recently have given up their sponsorship rights within their SPAC just to basically to make it more attractive to the acquisition candidates. Yeah. I saw one piece of data that there were 170 SPACs in 2000, and the average for the previous 3 years was about 30. So you can see the rapid increase in SPAC activity.
So what's the biggest reason what's driving this?
Low interest rates, zero interest rates, more than anything else. The abundance of available capital to all kinds of institutional investors, both ones as large and as Pershing Square to much smaller ones, to teams of entrepreneurs that see the ability to raise money very quickly and very cheaply, and then go out and arbitrage the difference in public market valuations versus private market valuations. Particularly and I think also COVID-19 has somewhat changed the dynamic for companies looking to go public, and I think has sort of galvanized the ability to do this, what used to be known as a poof IPO. Poof did a SPAC acquired a company, and poof, it was public. You can tell I have a degree of skepticism about some of the activity and just the increase in SPAC activity, because I know in the past these had not been viewed as the best ways for companies to go public and introduce themselves to institutional investors. And the surge in activity does cause me some concern that we're going to see some SPACs that unwind without the success that the operating company who sold into the SPAC was hoping for. But we haven't seen that yet. So
yeah, it's caveat emptor.